I'm Jane King at the NASDAQ market site. A small cap company says it's good to be public despite losing almost all of its IPO gains.
I'm Patricia with the New York Stock Exchange. The Russell 2000 up 3% in November. Where are we headed in December?
I'm Remy Blair in San Francisco. Small cap biotech names are seesawing on trial results, and big tech is getting greener when it comes to energy.
Welcome to Small Cap Nation. I'm Jane King at the NASDAQ market site in Times Square. After reporting earnings for the third fiscal quarter that matched analyst consensus and caused the company to inch up its year-end guidance, Box CEO Aaron Levie says a breakthrough is in the works. That wasn't enough, though, to move the needle on the stock. The company does remain unprofitable, and it isn't talking about a time frame for that to change. Its stock has rallied in recent weeks, up nearly 14% since the beginning of November, but it is still down nearly 40% from its IPO price in January. The CEO, though, says a breakthrough is coming. Well, Natus Medical has hit a new all-time high this week. Investors seem to be encouraged by the company's impressive third quarter results, wherein the top and bottom line managed to beat expectations. Moreover, Natus Medical raised its full year 2015 revenue and adjusted earnings guidance. Natus Medical Incorporated designs, manufactures, and markets newborn care and neurology healthcare products and services worldwide. Wayfair shares climbed after a record Black Friday and Cyber Monday as days of sales. The e-commerce home furnishings company shares were up about 14%. The CEO says the company is continuing to see an industry-wide shift to e-commerce that is especially evident during the peak retail season. Meanwhile, teen apparel retailer American Eagle Outfitters said its holiday season sales were off to a solid start, and it named Jay Schottenstein, who is heading the company on an interim basis, as its permanent chief executive. The company said it expected same-store sales to grow in the mid-single digits in the holiday quarter, compared with flat growth last year. A U.S. Steel executive will be leaving the company after helping to transition a unit in the reorganization. Jeff Turk, who is vice president of Service Center Solutions, will leave U.S. Steel in the first quarter of 2016 to pursue other opportunities after its industrial and service center units will be moved into a new division. Well, lots of small cap companies making news and earnings and other ways. Here's a rundown. Isle of Capri did report weaker revenue for its fiscal second quarter than what analysts had expected. Cabela's says that it is reviewing its strategic options. Apogee boosted its full year view for 2016 and narrowed its loss forecasts. Seska Therapeutics got approval for Medicare coverage. Matson saw Beijing E-Town Dragon acquire shares of the company. Oncogenics missed earnings expectations. On Deck Capital is working with JP Morgan on small business loans. Universal Technical Institute missed earnings expectations, and Zafgen saw a patient die during its drug study, and shares plummeted 61%. CST Brands plans to give eligible employees an opportunity to buy stock in the fast-growing convenience store chain. Beginning January 1st, employees who have been with the company more than 6 months can choose to put aside a portion of their salaries to purchase the discounted stock. Of the company's 11,000 employees, an estimated 8,000 will be eligible for the stock purchase program. And a group of 14 investors in Raleigh-based Nephrogenics publicly registered a block of shares they recently purchased from the company. The shareholders bought about 2.2 million shares for $5.5 million in early November and warrants for another 8 million shares in the next 5 years. Simply registering the shares does not signal an intent to sell. Nephrogenics executives were not made available to comment, but a spokeswoman said Nephrogenics is not aware of any investors wanting to sell shares. And McCormick Spices thinks you'll be eating spicy and tangy next year. The spice company previews the trends adventurous cooks will be following in the next year, and the overall takeaway is that people haven't been able to get enough heat for the last 16 years, so expect to see more of that next year. The Russell 2000 was up 3% in November, outperforming the S&P 500. Patricia Wu is at the New York Stock Exchange, where we're headed in December. Patricia.
Thanks, Jane. That is the $64 million question, and I've got Keith Bliss of Catone and Company here with me to help answer that. So, Keith, pretty good month for the Russell in November. How are we going to close out the year?
Well, I think we actually end up trading higher along with the other indexes. You know, the Russell really lagged the large cap indexes for most of the year, and that was of concern to me, but now it's successfully in November was a big part of that, while the S&P was flat and the NASDAQ was up only close to 1%. the Russell proceeded to outpace those indexes and get back in a very good technical position to see us out the rest of the year. So I think, personally, where we are with the S&P 500, where we are with the NASDAQ, which has really been leading everything this year, I think the Russell may be able to go back and challenge for the all-time highs that we hit in May.
All right, feeling pretty bullish. Now, we've got a lot of news on tap. We have the OPEC meeting, we've got the big jobs report, 2 weeks away from a likely Fed rate hike. Connect the dots for us. What's likely to have the most impact on small caps?
Well, if we're talking about bullish impact on small caps, a lot is going to depend upon how the Fed maneuvers and manages the narrative when they come out of that rate hike. I think some of the data that we've been seeing recently, that's in the cards. They're going to go ahead and hike. They want to do it. They want to put something on the board and get us set up for 2016. So it'll really depend on how they manage the narrative and how consumers react to that, because obviously small caps of all stripes get a lot of their business from the consumer market as opposed to the institutional or the commercial market. So that's one thing that could be bullish for them, and I think it will be bullish. People will start to feel good about job prospects. Again, the Fed will maneuver and manage that narrative. The thing that could be a headwind, though, is pardon me, again, what the Fed does is the stronger dollar. And it's a little bit counterintuitive when you think about it, but as the dollar gets stronger, obviously that makes imported goods more affordable to people in here. And you can see competitors, small, large, medium competitors from overseas come into the markets and challenge some of these smaller cap companies for the goods and services that they provide. So that could be a bit of a headwind. Hopefully sales projections and consumers here in this country will outpace any competitive risk that they'll have. And that's why I think that's one of the main reasons why I think you'll see the small caps trade higher.
So any other potential headwinds, and how are you playing it?
Well, again, it's things that you can't see on the horizon. We'll have to see what the impact of a modest rate increase does. Would that be enough to kick a fragile economy over the edge and into a recession? If it does, then you'll see credit tightening, which of course is dangerous for small cap companies. They do depend upon lines of credit or outright loans to produce their business and keep their businesses going. That's a risk that we can see on that. And of course, the consumer's been pretty fickle over the last year, even though we've seen lower prices at the pump, which should have translated into all of us spending more of our money, and lower interest rates. It's really financially, it's axiomatic. If you're not making any money in the bank, you should actually be spending your money. But of course, everybody's afraid to do that. So those are the two main risks. If credit gets tight and if the consumers suddenly go back into the hole after the Christmas season and don't spend their money, that could have a real headwind for small cap companies.
Absolutely. Consumer spending 2/3 of GDP. So thanks so much for your insight there.
My pleasure.
We'll take you to San Francisco next when Small Cap Nation comes right back.
Guys, I got the jerseys. El Nino. Aquí. Spray Dan.
Oh, yeah.
Don Ovan.
Think that's me?
You guy. It's $40. Can you cover that?
I'll send it to you right now. Done.
Okay, got it. So hat-trick Rick, he's the best player on our team. You get the ball, you give it to him.
Great. Rick.
On your phone, online, on the go, Wells Fargo makes it easy to get banking done.
All right, Don, you're on. Nope, just kidding.
Doug, you've been staring at that for a while, huh? Listen, TD Ameritrade has former floor traders to help walk you through that complex trade, so you'll be confident enough to do what you want. I'll pull up their number. Blammo. Let's get those guys on the horn. Ooh. Looks like it is time to upgrade your phone, Douglas.
For all the confidence you need, TD Ameritrade. You got this.
Let's go, Serena. Fight. Come on, fight. Can't stop me now. Come on, Serena.
Back to the top. Here we go. 2, 4, 5, 6. Whoa, stop. Let's go back. 1, 2. Whoa, we're gonna stop there. I bet we can do it even better.
It took tennis legend Serena Williams, fencing champion Tim Morehouse, and the world-famous Rockettes years to master their craft. But it took them only moments to master paying bills at Chase.com, depositing checks at Chase ATMs, and transferring funds on the mobile app. Technology designed for you, so you can easily master the way you bank.
Now let's go to Remy Blair, who's in San Francisco with the latest on small cap news from Silicon Valley.
Hi Jane, we're seeing plenty of action in the biotech space. As we edge closer to the weekend, a handful of small cap names are topping the most active list. Foamix Pharmaceuticals is getting a light volume boost on Thursday. Shares of the Israeli clinical stage pharma are up by over 10%. Now the company announced positive results from its phase 2 trial of FDX104. 24 subjects were tested for the trial. FDX104 is a doxycycline foam, and it was assessed for the prevention of acneiform skin rashes in patients who are taking EGFRI drugs, otherwise known as epidermal growth factor receptor antibody inhibitors. Now, the rashes are a common side effect for patients who are taking EGFRI drugs as a cancer treatment. Now, Foamix develops proprietary topical foams that address some of the unmet demands in dermatology, hence the company's name. Now, foam is an ideal delivery vehicle for many drugs, and Foamix boasts several patented foam platforms that deliver drugs to their target site. And the company's latest quarterly earnings beat estimates, with its annual earnings coming in within consensus forecasts. All 4 analysts who cover the stock give Foamix a buy rating. Other names that are in the spotlight include diabetes drug metformin and, of course, Zafgen's beloranib. Now, starting out with metformin, well, it's been making headlines as the next fountain of youth. The FDA approved the diabetes drug for anti-aging testing in a human trial. Now, the trial is called TAME, short for Targeting Aging with Metformin. The drug is frequently prescribed for type 2 diabetes in adults. The FDA approved human trials of metformin as an anti-aging drug, and trials are set to begin next year. Researchers believe that the drug will reduce the aging process in cells by increasing oxygen levels released into each cell. This FDA approval is based on the earlier research carried out to study the effects of the drug. Metformin slashes the amount of glucose in the liver to treat diabetes. And also in the healthcare space, Zafgen continues to extend its losses. Prices are down about 4% on Thursday. It is trading right near 52-week lows and right below the $6 mark. On Wednesday, shares shed over 60%, dragging its market cap below $162 million. The FDA put a complete hold on its obesity drug, which is beloranib, and this did come after a second patient death. Now, the hold means Zafgen must halt all clinical work while regulators explore safety measures. The company has since been downgraded by RBC Capital Markets and SunTrust. Now, research analysts at RBC Capital cut the company from an outperform rating to a sector perform rating with a $7 price target. And SunTrust Robinson Humphrey downgraded the biotech from buy to neutral from $25 per share to $7.
Straight ahead, we head across the pond for a look at what's happening in the European markets when Small Cap Nation comes right back.
Good. Very good. You see something moving off the shelves, and your first thought is to investigate the company. You are Type E. Yes, investment opportunities can be anywhere. Or not. But you know the difference.
E-Trade's barcode scanner. Shorten the distance between intuition and action. E-Trade. Opportunity is...
Before they sat down, one more time, just for themselves. Before the last grandchild graced the stage. Before Katie and her husband hit that rough patch. Before Kevin finally came home and the first grandchild arrived. Before the sons-in-law, daughters-in-law, and Brad's brief brush with the law. Before the second British invasion. Before Katie, Debbie, Kevin, and Brad. Before they became a family. There was a connection that started it all and made the future the wonderful thing it turned out to be. We know we're not the center of your life, but we'll do our best to help you connect to what is.
Sometimes the present looked bright, sometimes romantic. There were tears in my eyes, and tears in my eyes, And so many little things that we learned were really the biggest things. Through it all, we saved and had a retirement plan, and someone who listened and helped us along the way. Because we always knew that someday the future would be the present.
Every someday needs a plan. Talk with us about your retirement today.
Graham, what have the European markets been doing today?
Well, stocks slid on Wednesday after a disappointing reading on zero-value inflation, increasing and therefore increasing the likelihood of stimulus from the ECB. And really, we've been sitting waiting on the ECB up until now. The euro fell off as low as 0.57 last night. This morning stocks were all in the green up until the first announcement, with the 10-point rate cut announcement, which was less than much of the market wanted. Stocks started to fall off, and so ahead of the press conference the euro shot up touching to 0.70. The market is now sort of chewing on Mario Draghi's words, which seem to promise more simulation. QE apparently is going to be extended into first quarter 2017 with the reinvestment of maturing assets they've already purchased. And the market's reaction so far has all been to move off quite rapidly into the red, whilst the euro rose again above 0.70 and was getting close to 0.80. But we'll undoubtedly get more reaction tomorrow once things settle down and people have a chance to think about it a little. Additionally, there was quite a lot of data today. The Eurozone Composite Index for November, output index, rose but stayed below the first estimates, but was highest level that it has been since August this year, with new orders and employment rising. Retail sales also rose in the euro area for October. We don't have the November figures yet. In the UK, the services PMI came in up and better than market forecast, and it's the highest figure in 4 months due to the strength of new business. While employment slowed, backlogs rose and price pressures remain weak. On the other hand, the French composite PMI came in below initial estimate, the lowest reading since August, as the service sector growth eased and manufacturing basically stayed stagnant. So not a great story in France. However, contrarily almost, retail sales in France increased 4% year on year. So more news tomorrow once markets have digested the ECB's thoughts and actions, and we'll see what happens from there.
Well, Graham, what are you looking at today?
Well, we have a new entrant on the Frankfurt market. Not really an IPO, but more a case of a company becoming truly German.
Why is truly German an important concern?
Well, it's mainly an image issue. It was, until yesterday, a Swiss company, not a country known for engineering expertise in the car industry, just clocks and watches. Also, German industry tends to be a very tight-knit group, and the car industry is a particularly good example. And when recruiting highly qualified engineering staff in Germany, it's much easier if the company is seen as being German.
So who is this German paragon?
The company is Eag, which is one of the globally leading independent suppliers of engineering services to the automobile industry, who since 2006 have been pursuing a systematic acquisition strategy, so that by today it employs some 7,600 people in 19 countries. So really, actually, it's a truly international company.
What exactly does Eag do?
Well, with their vehicle development, electronics and production segments, they offer the opportunity to provide solutions along the entire life development cycle of a vehicle, from design to actually producing the complete vehicle development, exemplified by their first full car development for a derivative model, the Mercedes B-Class in 2001. This is complemented by their expertise in developing and optimizing production facilities and production processes, which was where the company started. With these competencies, they're really ideally positioned to respond flexibly to the growing demand for large and complex development solutions, as well as focusing on developing technologies for the future, such as electric mobility, lightweight construction, and car IT, in-car IT. Eag's strategy is to constantly expand their position as one of the world's leading independent engineering service providers, with of course a focus on profitable and sustainable growth. Within this strategy, Eag has had a consistent approach from being founded under a different name originally in the 1960s, and in 1970 the head office in Fulda was established in Germany. At that time the company was primarily oriented towards vehicle and production plant development. In 1987 the group started globalizing with the founding of a branch in Barcelona, which became actually one of the centers of low-cost production in Spain. And furthermore, a separate training department was established. More about that later, that's quite important. By 1995, the branch network in Germany included some 10 facilities situated close to the German manufacturers. And by 1997, the number of employees had expanded to 2,000 worldwide. In 1998, a very important point, Eag was the first automotive service provider to be admitted to the prestigious VDA, Association of the German Automotive Industry. By 2002, Eag had founded their tech center at Fulda, which is a multidisciplinary product development competence and center for lightweight design. And in 2004, they opened their first office in China, and in 2005, in Japan. By 2007, the group had grown to 3,500 people worldwide, and in 2009, they started to develop the light car open source, a purpose design body concept for electric vehicles primarily, using the latest standards in lightweight materials, semi-finished products, and joining technology. And this was presented initially at the Geneva Motor Show in 2014, and the development led to the presentation there of the futuristic vehicle sculptor Eag Genesis, which, using the example of body structure, was designed to demonstrate the revolutionary potential of additive manufacturing. And this led onward to the Eag Light Cocoon being shown at the Geneva Motor Show in 2015. Also in 2015, that's this year, construction work started at a new technology and development center in Wolfsburg, Walmu, which of course is close to Volkswagen. And additionally, a competence center for new production technology was established also at the same time. This now gives Eag some 70 locations in 25 countries and more than 7,400 employees at the customer's disposal for the development of vehicles and production plants. And a very important point, I think, an example of really what provides Germany's engineering strength. Of those 7,400 employees, 505 are apprentices and trainees. So upcoming engineers. So their focus is on international automotive industry, for which they develop and improve mobility, working with some of the best brands and most exciting brands in the world. 63% of their clients are automotive or automotive EMMs, 33% are suppliers, and 4% are in traffic and transport and logistics. Now, as of today, all the shares of Eag Engineering Swiss subholding AG will be integrated into the new company, Eag Engineering Group AG. So Eag is now really, truly a German company. That's all for today from Graham Brown for Small Cap Nation Europe.
We'll take you to San Francisco next when Small Cap Nation comes right back.
Everyone works hard for a reason. Working together, we can help you prepare financially for when 2 becomes 3. Wells Fargo. Together we'll go far.
You want to be the best investor you can be. You want to cut through the noise of an overwhelming amount of analysis. You want the insights that will help you decide which ideas to execute and which to leave behind. You want your trades executed in 1 second or less, guaranteed and routed with institutional quality technology. Look no further. Open an account and find more of the expertise you need to be a better investor.
When I got the phone call that we had received the grant, I held my breath.
To have a program like this is a big reward.
Being a Chase Mission Main Street grant recipient is a game changer.
One of the biggest surprises in starting a small business is the number of hours we should work for the first 20 years.
One of the great things about this grant is that it is going to let us invest in some additional inventories.
It's going to allow this business to go to the next level.
Being a recipient of this grant, we can't be thankful enough.
It's a dream come true, and I'm still in awe.
Now let's go to Remy Blair, who's in San Francisco with the latest on small cap news from Silicon Valley.
Google is back in the green energy spotlight. The company is already the largest corporate buyer of renewable energy, and it is expanding its clean power portfolio with deals for over 800 megawatts of solar and wind energy. Google Inc. deals with 6 planned projects. Now, these projects include 4 deals in the U.S. Google will purchase power from 2 200-megawatt wind projects from RES Americas and EDF Renewable Energy. It will also purchase energy from a 225-megawatt wind farm operated by Invenergy and a 61-megawatt Duke Energy solar project. And to top it all off, a deal has been signed with an 80-megawatt Acciona Energia solar project in Chile, along with a 76-megawatt Eolus wind farm in Sweden. Google has been investing heavily in renewable projects as part of its efforts to triple its purchasing of renewable energy by 2025 and power 100% of its operations from clean energy. When it comes to Google, it's not all good news. In this day and age, data breaches are viewed as as an unavoidable tech hazard. But when it comes to protecting the data of children, that's another story. The Electronic Frontier Foundation is asking the FTC to investigate the collection of personal data from school children through Chromebooks. The foundation filed a complaint that Google is collecting student data from Chromebooks used in schools and that the tech giant is violating a pledge signed earlier this year. According to the EFF, Google's Chrome web browser has a feature that helps the company collect personal data from teens, and this comes even as the company signed the student privacy pledge. The Sync browser feature was enabled by default on the Chromebooks used in schools. Now, the company does not outwardly obtain permission from the students or their parents to handle the data. The EFF says settings on Chromebooks allow personal information to be shared with third parties. Meanwhile, Google says its services enable students to learn and keep their information private and secure, and that they are confident that these tools comply with the law and their promises.
Listen up, investors. What to buy, sell, or hold, our daily segment on what the experts are recommending when Small Cap Nation returns.
Guys, I got the jerseys. El Nino. Aquí. Spray Dan.
Oh, yeah.
Don Ovan.
Think that's me?
You guy. It's $40. Can you cover that?
I'll send it to you right now. Done.
Okay, got it. So Hat-Trick Rick, he's the best player on our team. You get the ball, you give it to him.
Great. Rick.
On your phone, online, on the go, Wells Fargo makes it easy to get banking done.
All right, Don, you're on. Nope, just kidding.
Doug, you've been staring at that for a while, huh? Listen, TD Ameritrade has former floor traders to help walk you through that complex trade, so you'll be confident enough to do what you want. I'll pull up your number. Blammo. Let's get those guys on the horn. Ooh. Looks like it is time to upgrade your phone, Douglas.
For all the confidence you need, TD Ameritrade. You got this.
Let's go, Serena. Fight, fight. Come on, fight. Stay low. Come on, Serena.
Back to the top. Here we go. 2, 4, 5, 6. Whoa, stop. Let's go back. 1, 2. Whoa, we're gonna stop there. I bet we can do it even better.
It took tennis legend Serena Williams, fencing champion Tim Morehouse, and the world-famous Rockettes years to master their craft. But it took them only moments to master paying bills at Chase.com, depositing checks at Chase ATMs, and transferring funds on the mobile app. Technology designed for you, so you can easily master the way you bank.
In today's buy, sell, and hold action, Boyd Gaming was upgraded to neutral from sell at Goldman Sachs. Covanta Holding rated a new outperform at Oppenheimer. Energen was rated a new buy at Nomura. Grubhub shares rated a new buy at Mizuho. Laredo Petroleum rated a new neutral at Nomura. Matson Technology cut to neutral at B. Riley. Pandora Media shares rated a new market perform at BMO Capital Markets. And Parsley Energy rated a new buy at Nomura. Thanks for joining us on Small Cap Nation, and we'll see you back here tomorrow. Until then, check back for the latest news and research on smallcapnation.com, Facebook, and Twitter.